Welcome back to Business Daily here on Trust TV. Now, we're going to be looking at what we call the SEC, rather, the Securities and Exchange Commission has come up with quite a number of requirements. And, we talked about it in earlier during the week on Monday, when we looked at the recapitalization drive that is taking place in the country with, what's happening. SEC came up with their own last week. Now, there's a segment of that document or that information that we're looking at, and that's the one that affects the virtual space that is virtual asset service providers, digital people, token, cryptocurrency. Now, joining me virtually to have this conversation is Japhet Johnson. He's a blockchain and crypto expert. Good morning, Japhet. Thank you for joining us on the program this morning. We can't seem to hear you. Okay. All right. Okay, so Japhet, remember when I first came across that information and I saw your reaction, for lack of a better word, and I'm going to put in quotes, you were wailing, this has happened again. How do you feel about this requirements? Just for those who are not aware of what has happened, we'll have a picture up on the screen currently to show you what we're talking about. And we see that, for digital asset exchange people, it's gone up from 500 million to 2 billion. Now, digital asset custodians from 500 million to 2 billion. We see that digital asset offering platform is now 1 billion. We see, that real world asset tokenization and offering platform that didn't have anything as of the 2015 minimum capital requirement now has to pay 1 billion. So the digital asset intermediary that didn't have anything now has to pay 500 million. So we see a lot of things have come up. There's been some sort of increment. Those who didn't have to pay anything before now have to pay something. This new requirements, what's your take on it, Japhet?
All right, thank you very much. I think the moment I saw the document, I quickly started saying, who do they offend in this country? I was busy just praying on my WhatsApp status. I think that's where you saw my wailing. But really, it's really sad seeing after all the engagement with stakeholders, with association from CBAN and others, we are still getting this heat from SEC. It really shows there's no really synergy to understand the plight of indigenous innovators. And that really hurts a lot because we are beginning to see how, in quotes, somehow from the back end, people are not allowing us to build the rails where this product should run on, right? We're beginning to see a clear sabotage on we cannot be able to build something here. We will always use something that's built outside, and that is what we have been expecting the SEC to come and help us with, not to come with this selective access method of clearing out ingenious innovators and giving these opportunities to companies outside that could afford it. I think that was what I felt immediately, and I started crying online about who do they offend actually in the country.
Okay, now I understand that, when these things happen, it's supposed to best help people who invest in these platforms get their money back, best help the economy. Now, don't you think that this is actually the right plan? However, for me, the question is about timing. I know that, yes, we're doing so well in sub-Saharan Africa with the crypto world, the blockchain world, but would it have been better for it to be given enough more time for people to consolidate more before this recapitalization takes place?
Yes, definitely. I think every new industry that comes up, more especially in the technology space, it goes through some phases that has to do with even people adopting, becoming matured, and regulation, right? We are getting at the point where Nigerians need to be even aware of what we are even doing. The new technology of the virtual asset, do they even understand about it, right? So we're beginning to see how we can encourage innovators to, okay, let's build these platforms, right? Let's manage our own people's data. So we are at the phase of we want to actually let people know what it's happening while we are also encouraging our own people to build. So when we see South Africa offering over 400 and something licenses, we are seeing Ghana coming up, we are seeing Kenya. Now, it's not because they don't want to protect the citizens, right? But it's because they want to give you guys an opportunity to actually set something running so that we can even understand clear. As regulators, we need to understand, how does this work? How do you do your KYCs? How do we vet the founders of these projects, right? Do we even know them? What are they building on? Are the platforms being run from another country? Are the servers outside the country? So what level of control do we have on this data? So those are the things that you allow companies, more especially indigenous companies, to start working on, because it gives you a holistic view of what you want to do and how you regulate them. We're not seeing that now, right? We're just seeing the aspect of, we want you to pay social amount of money to play the game, irrespective of who is powering you, who is actually sponsoring the company. That's what we're seeing, just pay the money. And let me tell you, this is what has been affecting, even from the normal financial system. We have seen Paystack. Paystack was built by Nigerians, managed by Nigerians over a period of time. What happened? Stripe bought them up. Who is Stripe? From where? From the US. I can bet you Flutterwave is almost 90% controlled by companies in the US, right? So we are seeing the same thing happening in the virtual asset space now. Because you are coming to say, pay 1 billion, pay 2 billion. Let me tell you, an average startup that goes through Y Combinator in Silicon Valley gets to approach in VC, and the minimum they can get sometimes $2 million, $4 million. That startup I'm talking about. So you are saying a startup can actually buy a license to operate virtual assets here in Nigeria without knowing if they can do it well, without knowing if they can manage our data properly. But because they could afford that money, that means they can come and play in the space. And now what are we doing? We are pricing out innovators. That's what is happening. We claim to say we support homegrown technology or innovators, but at the end of the, what are we doing now? This is a clear way of saying we are pricing you out, because we know the economy is there, that you guys can't pay this money. So who are we inviting? The big boys. Where are the big boys? They are not in Nigeria. They're not going to put their money where they know the regulations can change tomorrow. That means if we are moving from 500 million to 2 billion, it's possible by next year we'll move from 2 billion to 200 billion. That's how easy it is for our regulators to quote money and just feel like everybody can just go ahead and make payment. Okay. If you want to play, good. If you don't want to play, that's fine. But that is what is hurting us. And we feel this is not support to the ecosystem. And that is not what other African countries are doing. So we are really sad about that.
Okay, hopefully the SEC will get this message and will listen to it and maybe have some revise. However, they say that this information and this compliance takes effect immediately, and that the people have, I think, up until 30th of June this year or 2027. Okay, actually, you have 1 year, 6 months to actually be able to meet with this compliance. But let's ask these questions. Wouldn't this be a way to open up the virtual service asset provider space? You know, the way banks now have to sell shares to make up money to meet up with their recapitalization money. Wouldn't that be a thing too? Wouldn't it be time for maybe some mergers, you know, to help us have a clean space? I understand what you're saying, whereby because you want to meet up with these people might have to sell out to other people, but there must be some pros here that could affect that space and equally the Nigerian economy as well.
So definitely, like I always say, we're not saying all what the regulators are doing is bad, but like you said, timing is important and understanding our current economy, right? Now, if you do this, let's see the banks. We have a lot of banks that has to merge. There was a lot of documentations, and they already have a system that have been running for decades, and we understand. But this is an emerging market, right? Now, the few that have been able to come together to say, let's build this, let's do this, let's build this company in Nigeria. You are telling them to merge. Merge with who? That's the question. So what we are saying is that you're not allowing us to build the reels. You are just saying, let's merge with another. What we are saying is selling it to another people outside the country. It's not about merging. We barely have 6 to 7 companies that already have the provisional license. That's too sad. Not a full license. 2 of them are in the virtual asset space. Then one, I think, for CNGN. The question we'll ask ourselves, if those 2 are coming, what are they coming to merge? So it's just saying we are all opening up the space for people that can afford money. So it's all about money now. It's not about really looking at the core of how do we actually have have our data sovereignty? How do we have control over security? How do you have control over our data and whatsoever? So those are the things we should be looking at from the core, right? So, and at the same time, it's not blockchain or the virtual asset. It's not just about money. We have real asset tokenization. We are seeing other aspects of that space. So how do you tend to encourage them? We are not seeing VCs. Money is not even coming into the space anymore. We are not seeing VCs even giving virtual asset providers funds anymore. It has gone to the Kuwait, Dubai, Singapore. Those are the places where I see investors going. So the SEC is not even making investors feel like, okay, this is a safe ground for us to invest in local innovators. Because when we begin to invest in local innovators, then they begin to feel the sense of responsibility. Okay, we have the people there managing this product. We have the government supporting those people building the product. So it's not all about us having control, but we might need to also play by the regulators' rule. That's what we are saying. So it's not about Stripe or another company taking over and calling the shots from US. No, we want to see companies that call the shot right here in Nigeria, make the rules for Nigerians, and also global players to also abide by it. I think that's what we should be looking at here.
All right, Japhet. Now, our time is quite far spent, and just in 30 seconds, what do you think? I'm going to ask a question that requires just a single answer. Did the SEC, before coming to these regulatory numbers, have a sit down with the people in this sector to know how best to move forward?
They did on different occasions, and the outcome was more of we are going to support you guys and see how we can come. But this current one, I can really bet you, I don't really think there was really a time they sat down to say this is what we want to do. We just saw this and it was hitting everybody just like a thunderstorm. That's what happened.
Okay.
Why I'm somehow disappointed is because I feel the SEC has gotten time to engage with us over a period of time. The Director General of SEC has been in this space helping this association even before he became the Director General. So we actually had a lot of expectation from him, looking at the fact that there should be tiered licensing. There should be like a way that he actually moved some of these homegrown solutions gradually to this point where they can actually get investment, where they can even say, now we are making social number of volume and we can actually pay for this. So we're expecting a lot from him, not coming to make the industry look like it's already matured already in Nigeria. No, it's not yet matured. Okay. We need him to work with us to actually build something that we can say, yes, during your regime, sir, we're able to have 4, 5, 10 companies that were able to actually reach this market cap and they can be able to pay for this capitalization. That's what we are looking at. All the banks did not start this way. You can go and check microfinance banks, you can see their requirements. So we're just coming and we are just becoming like we are already the Zeniths and the UBAs from startup. So that's really sad.
Unfortunately, we have to end this here. Time it's not has far gone for us on the program this morning. Thank you for your insights on the situation. Hopefully, this issue will be resolved for the better.
Thank you.
And that's it for Business Daily this morning. Same time, same place tomorrow. Bye for now.